Welcome back. It's Wednesday distribution day for YieldMax. We do get them on their X.com account, as you can see. I guess for those who haven't realized yet, but they do have a sorting mechanism that seems to sort the distributions by highest to lowest. Therefore, you got Murney and AIYY down here at 2 cents. Whereas you got some of their newer ones that had an opening price of 50 have the higher ETF price toward the top. Additionally, the ones with the higher implied volatility that are paying the higher distributions. But the Circle and Roblox and PLT ones are all 89, 75, 73 cents respectively. Just to note, I won't read all these, but just to note some of them, Hui, and these are all weekly now. So just as a note, Hui 73 cents, D-Ray was 70 cents. Here's a couple of their newer ones, or HIYY was 62 cents. That's one of the newer ones. RDYY, GMY, some of the newer ones as well, 61 and about 56.5 cents. But for some of the ones that are the more held one, you can see MSTY here was at 21 cents. GUI was actually pretty good, I think, for at like 21 cents, because annual or monthly, take that times 4 roughly. Some months, of course, have 4 weeks, some months have 5 weeks. But if you take that times 4, you got about 84 cents for the month. If that could stay, that's pretty good for GUI. But TSLY, 16 cents. Some of the other widely held ones, I know Coney is pretty widely held at 9 cents, and NVDY, oh, I just saw it there. We go at 12 cents. So there's some of the widely held ones, at least from the single stock pain perspective. So this, of course, this shows it in terms of the distribution, high to low. I put it on my site so I can show it as a distribution as a percent of the ETF price, high to low. That's how I like to look at it. So I'll jump to that shortly. But just some reactions. So yeah, MSTY 20 cents times 4, 80 cents a month. Some people think that they went to the weekly. Oops, didn't mean to do that. Some people think they went to the weekly so that the MSTY was going to be underneath $1, and they didn't want to show that for the month, so they went down to weekly so that people can't do math and see that 20 times 4 is about 80 cents, so it would have been under $1. But yeah, a lot of kind of disappointed chatter, it seems. For this one, almost none of them have a green chart. That's true. You got to look at the total return on these, though. You can't look at the ETF price. If the ETF price can stay constant, that's actually very nice for what the yield that these things are paying. What's going on with NVDY? I'll take a look at that. With a lot of these, you look at what their cash position is and how much they're making on their weekly call contracts. Because I assume what's going to happen, so they're paying you their weekly amounts they take in from selling their weekly calls. When you used to get the monthly distributions, you get that money, but then you'd also get some of the money that they would get from cashing out a synthetic, for example. So when the stock goes up and they cash out their synthetic position, sometimes you get that money as well. So I imagine there might be a little bit of volatility in these payouts. You might have an average payout that you get about every week, but then every now and then you might get more if the synthetic actually, you cash that out and give you some of those proceeds. But we'll see how they manage it. They could just cash the synthetic and let the ETF price go up. That'd also be nice in my opinion, but I guess we'll see. Some people, there's a lot of comparisons between these and Roundhill, and I'll look to add Roundhill to my site here shortly. The reason I have it, so the ETFs, or the YieldMax ETFs, they have a lot more information available on their site where you can pull it in, you can really analyze what they're doing. From what I've seen from Roundhill, they basically just have a leveraged fund, and there's 1.2 times. There's not really necessarily a lot of details on that, exactly how they pay the distribution and such. At least not that I've seen. Maybe if there is, you can let me know. But I'm going to add it to my site in terms of how they're performing. A lot of them are performing very well. But with the leveraged fund, you'd expect something to perform well in a bull market relative to a covered call ETF fund. The levered fund, if it goes up and you're just taking 1.2 times the bull market and paying some of that in premium, you are catching some of the upside there. I'd expect Roundhill to perform better in a bull market, but possibly perform worse in a bear market. That said, we can see how that goes. I'm going to look to compare those going forward. But once again, a lot of people going to Roundhill. I'm interested to see how Roundhill performs in more of a bearish market. But anyway, those are the distributions. You can go to X and read them all if you like. But if you go to the site here and you go to the YieldMax tab, of course, just first thing to note, I guess the general YieldMax tab, I adjusted this, so now it just shows you the market caps, basically all their single stock funds. Oh, it's not just single stock, it's the single stock as well as like the YMAX, YMAG, and ULTIs. So basically almost everything they have. It might be everything they have. I don't know if I got the short ones in here yet. I do got Winter, but I got like Fiat. So maybe I do got them all in here. But it shows you based on fund size. So these are, of course, their largest funds, MSTY being the largest at 3.5 billion. That said, recently, I think it was like 5.5 billion. So it's definitely come down a lot. ULTI just fell underneath 3 billion. But MSTY and ULTI are the largest, followed by NVDY. And then Coney and TSLY are about tied. And then over here, of course, you got the YMAG, YMAX, and PLTY. Those are probably your top 8 or so funds. And then, of course, down here, a lot of your smaller ones. But jumping into If you go to the weekly Friday, so this is the weeklies that pay out on Friday, or what I like to call them the single stock YieldMax ETFs that pay you a distribution based on single stock. So we got a like-to-like comparison this week because everything's paying weekly, whereas last week, some were paying weekly, some were paying 2 weeks worth, some were paying 3 weeks worth, some were paying 4 weeks worth. So now we can do a comparison of all these. And if we sort based on percent, so take the recent dividend divided by the recent price, maybe I'll zoom in just a tad so we can see that. But you can see the best, if we want to do the top 5, we got TSLY, MARO, TSLY, AMDY, and DRAY in terms of what they're paying as a percent of what their ETF price is. And those are all right around the 2%. So I think this is probably what we're going to see going forward. The top ones are probably going to be at around 2%. You can have a lot of them in the next round be about 1.5%. Then there's going to be a lot of them that I think are going to be scattered around 1%. And then if you get to the bottom here, you can see Berkshire C paid 15 cents for the week on almost a $47 ETF, which comes at just 0.33%. That is for the week, so the percent return is on a weekly basis. So you can times that by 52 or so to get your annualized rate. But this kind of makes sense. Some of the ones that jump out to me as being low are probably AMZY, NVDY. I think those would have some more volatility to them to get their distributions up a bit. FBY I'd expect to be a little higher. Other than that, a lot of this will probably align with the implied volatility charts. Ones with higher implied volatility will probably be higher. Ones with lower implied volatility will, of course, be lower. I think I'm going to look to capture that metric, implied volatility, and just plot it so you can compare those two metrics side by side. As I said, the ones that seem a little higher than I would expect, GUI, that one, like I already noted, seemed pretty good at 21 cents or 1.51% for Google, which I wouldn't think Google is as volatile as Roblox or SMCI or even MicroStrategy or Strategy. But a lot of the other ones fell where I thought. AMDY looks a little higher than I would expect it to fall. Yeah, you can let me know what you think. PLTY looks, I guess we can compare these, of course. So TSLY, for example, if you go to let me see if I had anything more I wanted to say there. I don't think so. If you go to the TSLY tab, so we are capturing the distributions. These charts, of course, are lower. So eventually I'll probably add a filtering icon and we'll probably filter everything out before October, basically last week where the weekly started. Or maybe we'll even take out last week because last week's kind of noisy based on which stock it was and whether it was paying 1, 2, 3, or 4 weeks worth of distributions. So probably from this month forward, it might be a good filter icon to remove everything past that and kind of look how it trends from today's date going forward from a distribution perspective. Because of course, right now we're just getting the weeklies versus everything before was on a monthly basis. But so I'll look to add that going forward. It's of no use, of course, right now because we're going to have data to really do that. We need a few more weeks worth of data to see how the trending comes for all these distributions. But yeah, if you want to come to the site, I'll put the site down in the YouTube description. But you can come look at the distributions. The other thing I just want to cover quick, some of the larger ones, of course, on the side, I do got the details. And the details tab, of course, shows what positions the ETF has at the moment. So if you go to the positioning tab, you can see for Tesla down a little bit today, 2.26% to 432. So the black line usually shows where the stock price was when I basically ran the code to update everything, usually in the morning. Varies. Whenever the code kicks off, we'll pull the price and put the line here. But right now you can see it since I ran it, it's 433, so it's a little lower. So it's probably right around this area. But you see all their calls that they have wrote for the week or sold for the week, however you want to look at it. They expire 10/24. They start at 442.50 and go all the way up to 457. So currently all these are out of the money, and all the call spreads that they bought or the calls that they bought at higher strike prices, those are also out of the money. The strikes are at 415 and 420. You can see that by the red line. So if you look at this from a fund makeup perspective, we got a little bit of value in the synthetic because the stock price is above where the synthetics are structured. So you have 52 cents. And this was as of this morning, so it might have gone down slightly with the share price a bit lower than it was this morning. But so this is how the fund is made up. Cash, $8. Then if you add in the other contracts value currently is negative 15 cents. So this is a metric. This, of course, is real time. But this is a metric that you can track, probably estimate what their weekly distributions will be. So I don't know what they sold them for exactly, but I know as of this morning, the contracts were negative 15 cents, which means if they would have sold them this morning, they would have expired worthless. That has a 15 cents that they could give you as a distribution just from selling those weekly contracts. Another way, before I jump into that further, looking at their synthetic, they are doing full 100% credit spreads. So they sell a call at a lower strike price, buy a call at a higher strike price. That's how they're generating their weekly income. And then, of course, this chart I think will be more in focus going forward. So if you want to try to estimate what their cash distribution is, track what their cash positioning is. Track what their cash positioning is from a week-to-week basis. So today it's 8. It looks like after they paid their last distribution, which let me just check quick. So the last distribution was paid. This distribution will go ex-dividend, I believe, tomorrow, so the 23rd. Their last one went ex-dividend on the 15th. So basically, you go here, look at the 15th, and you can uncheck check marks. It might make this a little more easy. You can filter certain dates out as you want, but I'm really just looking at the last few here. So they went ex-dividend on the 15th to the 6th, basically the 15th to the 16th. So you can see their cash position went from $18 and almost 16 cents to $7.97. So just over 15 cents a share. If you go back to TSLY and just look at their distributions per share, you can see last month was 19 cents. So it lines up with how much their cash position went down. It went down 19 cents. So I said over 15 cents as a simplification, but actually it went from about 16 cents to, so it went down almost exactly 19 cents, as you can see. But since then, so we had $7.97. Right now, our cash position is, or you can see when we sold contracts, the cash position went from $7.96 up to $8.06 or $8.07 almost. So overall, we took in about 10 cents in terms of cash. As far as what we paid, my mind, I just go back to make sure I don't say exactly what they're wrong, but they declared 16 cents. They declared a distribution of about 6 cents more than what they took in. But basically tracking this chart, if you track how much money they've made since their last distribution, and that will show you what they really have. So they have about 10 cents. They paid you 16 cents. They can pay you whatever they want. They can really pay you anything here. But since they pay you 16 cents, when it pays, the cash amount will be slightly less than it was before. So we'll take the ETF value down with it by 6 cents, a difference. Some months, like you can see, TSLY has 52 cents in their synthetic. If they were to cash out that synthetic, which as you can see happened back in September, they cashed out the synthetic. So their synthetic went from $1.67 down to 15 cents. And likewise, their cash position went up quite a bit. Then when they pay the distribution, sometimes they use some of that cash that they generate from cash in. I call it cash in the synthetic. All they're really taking the synthetic strike price. Basically, a synthetic is basically where they buy a call and sell a put at the same strike price. If you move that higher, and it basically gives you the right to own the stock, or it gives you the same exposure as owning 100 shares of the stock. If you move that strike price higher, so your call, instead of, let's say if it was at $100 a share, if you move it to $120 a share, so that gives you the right to buy instead of at $100 a share, it gives you the right to buy it at $120 a share. Clearly that's worth less, because I'd rather have the right to buy it at 100. So let's say the stock's trading on like go 130. So the right to own it at 100 is worth more than the right to own it at 120. In both cases, the put you sold would be effectively worthless. But in order to do that, if you move the strike price higher, they give you cash, or you basically take in cash because you sell your synthetic at 100 strike and then buy a new synthetic at 120. The one you sell at 100 is worth quite a bit more than the one at 120. So you take in a substantial amount of cash. That works the other way too, though. If the stock falls, they try to keep the synthetic at or near where the current strike price is, or the current stock price is. So if the stock would then fall to 90, and I'm talking the underlying stock, they probably want to keep their synthetic at 120. They'd move it back down at maybe at 90. So that works on the other hand too. When they move the synthetic down, they use cash to basically move that strike price down to keep the strike price of the synthetic somewhat close to where the underlying stock price is at. But basically, if you track this from distribution date to distribution date, you can see how much their cash increases. And maybe instead of showing all these dates, I will just filter out or maybe add an option just to show the distribution dates. So you can see the movement from distribution to distribution. So you can calculate that easier than like going back and actually seeing how much they made. So you can see TSLY for the week, and they get the cash right away when they sell them. So they might sell calls over a couple day period, but usually right away, right at the start of the week. So it looks like since when they paid their last distribution, they wrote some calls over the last few days to take their cash position up 10 cents a share. So that gives them 10 cents. The other 6 cents looks like they're just pulling from the ETF price or pulling from their previous cash position and pay probably a little bit more than they actually took in. But at any point, they can cash the synthetic. So let's say they cash the synthetic, got it, and then when they cashed in the synthetic, they basically take the value of the synthetic. So once again, going on the synthetic, so if the current price of TSLY is 433, if you structure new synthetic at about between either 430 or 435, so that would mean bringing the synthetic up from 415 and 420 to 430 to 435. That basically take the synthetic value down to zero, but for that, you get about 52 cents. So they can take that 52 cents and either keep it in their cash positioning, which would raise their cash value, this blue line, or they can take a portion of that and give it to you. So let's say they take 30 cents and plus the 10 cents, So they cash that in, maybe on a weekly basis, you might randomly get 40 cents. That, of course, wouldn't be assumed to go into the future. That's just what they decided to do for that week. The next week, unless the TSLY underlying stock went higher, they wouldn't necessarily have a synthetic to cash in to pay you. But yeah, tracking this chart over time can give you some kind of insight to around probably where your distribution will be. So that was a long-winded answer, but I find now that they're paying on a weekly basis, this chart will be helpful in terms of determining how much they're making from the weekly contracts or how much premium they're taking in. It's not exact, it's a rough estimate, but it gives you, like I said, it gives you a rough estimate. But so let's jump into another one. Let's jump into just MSTY. I want to take a look at MSTY and NVDY, and I'll call it a day on this. But MSTY right now down pretty good, 5%. Bitcoin's been super volatile lately. Looks like it's down again today, but it goes up and down and up and down. That said, MSTY, so we're at 285, so a little bit lower than this black line. That said, all the calls are sold between 300 and 320. So if MicroStrategy or strategy underlying doesn't get above 300, basically all the calls they wrote are worthless. You get to keep the premium. That said, your synthetic is struggling because you can see we got synthetics written at 330, 345, and 350. So with it at 285, if you go into the fund makeup per share, you can see we got negative $1.46 in our synthetic right now. So this is one of those that would work the other way. If strategy doesn't come higher, I assume they're going to take some of their cash and restructure their synthetic. So their cash position will go down, and the strike prices of the synthetic would also come down. But right now, you see their other contracts are worth about negative 13 cents. As far as what they're doing, so MicroStrategy has been interesting lately because even right now, if you look at like the previous iteration, it doesn't look like they're changing much. So previous iterations, basically like what their fund was yesterday versus today, it's basically the same. Doesn't look like they're moving a lot. So on their synthetic, it looks like they are doing credit spreads for 28,000 of the contracts, so about a quarter, or I should say a quarter of their total positioning, but of the ones they have sold, probably about a third of them are doing credit spreads. 2/3 of them are like naked, or there's no, they're just selling the call, using the synthetic as collateral. They're not buying an upward credit spread on it to limit losses. But at the same time, it looks like they're keeping like a quarter of their position that they could write calls on. They're just not writing any calls on it. So in case strategy or Bitcoin rockets higher, on a quarter of the position, there's no cap at all. So a quarter of the fund would perform basically exactly like strategy does. Another quarter would be capped at a certain strike price, but then you have this other strike price at a higher, or this other calls, I should say, at a higher strike price. I would start capturing gains once the position went above 322.50. And then it looks like about half the fund is just capped. So once it hits the strike price, your upside's capped. So that looks like what they're doing for strategy. If you look at how their metrics are performing over time, you can see the cash position has just been on a downward trail. A lot of this is they're paying you distributions, but they're also, when these synthetics get too low, they use cash to try to bring them up to zero. So once again, we are at a negative position here, so might use some cash accordingly. But if you look at this, so the last time they paid that distribution, 1015 and 1016, we're at 1385. Now we're at 1394. So once again, 10 cents is about what we took in. I think they're paying 20 cents. So they're paying 10 cents more than they technically made on their weeklies, at least per my calculations. So they're using some of their cash value to keep the YieldMax. It's not very high relative to the past, but it's probably higher than it should be. So that said, I think I'm on the personal opinion, Bitcoin's going to go higher, but I guess we'll see. That'll definitely adjust how this fund does going into the future. And then finally, I just get hit NVDY because there was a question on NVDY. What's going on? The distribution, I think, was at like 10 cents. Or let's actually go into it here. So the last 2 weeks, the distributions, they are like 10 and 12 cents, or 11 cents and 12 cents. As far as what's going on here, that average is 40 cents, which sometimes NVIDIA has been around 60 to $1, 60 cents to $1. But you can see right now, so NVIDIA down a little bit today. All the calls it has sold are between 185 and 190. So it looks like those are all basically at the point of being worthless. The synthetic does have some value in it, $1.26, so a pretty good amount of synthetic value in NVDY. The contracts that they have sold right now are only worth like 4 cents. And then as far as what they're basically doing credit spreads for like 95%, and they got 5% that are just capped, which sounds pretty good to me. I do using credit spreads because if you got the upward movement in the underlying stock over the long haul, you don't want to miss out on all that. You do want to capture it. That significantly helps you. But overall, so if you look at their cash positioning since about the 15th, so you can see 15th, we're at 1431. Now we're at 1441. So NVDY is paying 10 cents, or it's paying 12 cents? It's paying about exactly what they took in from selling their weeklies. So I like it. It's conservative. At any point, though, if NVDY cashes in some of that synthetic position, you could expect a pretty good distribution, assuming they take some of that and pay you out. So with that said, I'd be looking to add NVDY. They got that synthetic, assuming, of course, this all assumes the underlying equity of NVIDIA doesn't tank or stays about at the 180 mark. I'd anticipate in another weekly period that they might have a very good distribution if they use some of their synthetic, of course, to pay it. But anyway, that's my opinions on that. Let me know what you think. Thanks for tuning in.